back to the Online Collections Technology Think Tank 3.1. For those of you who just joined us, you've missed a couple of really good panel discussions this morning on customer engagement and collections risk and talking about technology and people in the mix. Really interesting announcements already today as well from Ofgem. I think Rishi Sunak's going through his rigmarole at the moment in terms of how the government's reacting to those announcements. So yeah, and more news to come today with the household cost of living really changing over the next couple of days. So I just wanted to welcome you all into this session. We're going to look at vulnerable customers and affordability shortly, but I just wanted to get your attention to being involved with this particular session. So have a quick look on the site that you've got in front of you. You've got a panel of options. If you can just have a look at the I section and get involved with that, it gives you information about today's event. We've got a little people icon, so have a look at that as well. That includes information on all of our great panelists that we've got coming up. We've got a document box which gives you more information about other Credit Connect events we've got coming up across the year. And then it's also some examples of some downloads that you look at as well. But the important one that we've got on here is the question box. Please get involved, ask questions, get involved with our socials as well. Hashtag collections tech TT. We'd love for you to get involved with that. Give us comments on the event. There will be a poll at the end which asks for your feedback and what you think of the event as well. So please definitely give us that information because we really want to improve every event that we do. So want you all involved as much as we can. And so what we're going to do, we'll crack on with it. Enough from me. I will hand back to our brilliant chair for the day, Vanessa Northam from Step Change, to introduce today's panelists and get the conversation going. Vanessa, thank you.
Very much, Colin, and thank you if you have joined us. I know we are competing with the Chancellor's announcement, so we do appreciate. There's quite a bit of interference. I don't know if that's on any of our speakers, but maybe if they could just mute for the thing. So yes, we are indeed competing with Rishi Sunak's announcement. I'm delighted that on our panel we have Kevin Stewart, who is going to be exiting stage left at 12:30 to discuss with his chief exec the announcement that Rishi's just made. So what we're going to do is we're going to introduce the panel, and then we're just going to have some initial reflections on the announcement. So both the price cap increase, which has increased by £693, and then the raft of support measures that have been announced. We've got it couldn't be more pertinent to the topic, which is around vulnerability and affordability. So I'm going to ask the panelists to introduce themselves swiftly. We'll then have the reflections and then we'll move into more general questions. So I'm going to start with Chris Leslie from Credit Services Association.
No, thanks, Vanessa. Chris Leslie, I'm the Chief Exec at the Credit Services Association, which is the national trade body for the debt purchase and debt collection agency sector. We've got about sort of 260 member firms, and so it's difficult to be absolutely precise, but around about 11,000 staff working in that sector across the UK, and obviously quite a sector quite closely with its finger on the pulse about what's going on in credit and economic markets more widely. I'm a sort of recovering politician, having been spat out and defenestrated backwards from the world of from the House of Commons. I was a minister in various different departments, local government, cabinet office. What else do I do? Crime, criminal justice. So, but this is where politicians go to enjoy their next phase of their career into trade associations. So here I am.
And Chris had the pleasure of being my local MP, but I did not have the need to contact him for any of my issues. So thanks, Chris. Well, I'm going to move now to Dominic from Teljo. Dom.
Hi, I'm Dom, the founder of Teljo. Probably easier just to describe what Teljo is, a bit more interesting than me. But Teljo basically is a software as a service where predominantly councils will drop in their arrears customers, their council tax arrears customers, We will then engage with those customers with our wellbeing assessment, which takes 7 minutes to do. With our wellbeing assessment that's done on the smartphone or desktop, we'll find 63 indicators of vulnerability. And at the end of the assessment, we'll create payment arrangements, we'll do signposting, we'll put people into debt advice, and then with consent, we'll share that data back to the councils so they can then improve their homelessness prevention, increase their collections, and so on. So that's Tadra in a nutshell.
Thanks, Dom. Kevin Still.
Morning, everybody. My career goes back quite a long way, but started off in the credit reference world, lots of data sharing schemes, analytics, and then more gradually over the course of many, many years into the trade body work and working with a number of affiliates in the sort of space. So my members represent debt advice firms, debt solution firms, insolvency practitioners, but increasingly over the last 2 years, particularly in the vulnerability space and the affordability space, lots of providers that are looking to either integrate with technical platforms and then to creditors and other providers, or directly with creditors. And that could be natural language processing, it could be vulnerability databases, it can be open banking. So there's a whole range of areas that I think relevant to today in terms of how do you put your money where your mouth is, in terms of actually when vulnerability is identified, how do you actually use that information? And I think that is the $1 million question, Vanessa, now, is the tools are there, in some in their infancy, but when you find out that there's some information you need to act upon, how do you embed it in your business?
Well, I'm looking forward to those insights, Kevin. Thank you. And finally, Kevin Stewart, I think you've been getting a lot of emails probably into your inbox, but if you'd like to introduce yourself, and then we'll go straight into reflecting on the announcement.
Thank you. My name is Kevin Stewart. I'm the business unit leader for revenues and benefits at Mid Sussex District Council. I've been in this profession 40 years, and I'm responsible for the collection of council tax, business rates, and the payment of benefits. And obviously, the last 2 years has been very interesting because we've also had the business grants. As you correctly said, we've had some additional council tax announcements in the last few minutes. So I'm going to have to disappear at 12:30. We use Teljo. I believe that we need to help the vulnerable people who pay council tax. For me, it's just not about collecting it. It's about giving additional help to people. I'm well known in the profession. I'm a former national president of the Institute of Revenues, Rating and Valuation, and still a council member. So I'm very much looking forward to the discussion with my colleagues today.
Thanks very much, Kevin. We really appreciate you staying with us until 12:30. So, an unprecedented energy price rise and not so unprecedented level of government support, given what we've seen from the Chancellor over the last 2 years. Who wants to kick us off on the reflections on the support package? So just to summarise, it is the £200 rebate on a bill, on energy bills to be paid back over 5 years, £150 council tax rebate. I don't know if I'm using the right terminology, which will be applied to bands A to D. Local authority support package to help the most vulnerable, and a whole load more. And in the main, that applies to England, Scotland, England and Wales. And there's additional support for the devolved nations. Obviously, I will not be taking on Adam Bolton's role on Sky anytime soon. But just some reflections. Dom, Kevin, Chris, start us off.
Sure, I don't mind kicking off. I mean, the obviously the news is going to be a bit of a shock to people because it'll percolate through to most people today. I think most people knew there was something in the offing because of, the Russian-Ukraine conflict and sort of climate change pressures generally pushing up energy prices, reducing supply, a lot of demand worldwide as it reopens. So they knew energy bills were kind of heading in that direction. Government, I think, they're pretty aware that this will turn into a political issue. It was about 10 years ago when I was in opposition. And I think that was the point at which the price cap came in initially. It's always a bit of a messy thing to intervene in the market in the way that some of the systems and regulatory arrangements work out. As far as I'm concerned, from our sector, from the collections and purchase sector. Look, I mean, our commitment to continued forbearance across the sector will be more important than ever. I think that it will definitely change the calculus on income and expenditure assessments, and I think it's not just energy, of course. I think one thing I've just seen, CPI predicted inflation rate probably up around 7% by April. So this is sort of across the board stuff. We'll see the consequentials in terms of wage demands and all sorts of stuff. And the notion, I always think it was quite funny anyway, really, various central banks sort of predicting this is just a transitory thing, inflation. I think most people have been shaken out of that for the time being. So it's going to be a difficult period. But, fortunately, our sector has a good track record of knowing how to assess people's circumstances and offer forbearance as best as possible, and we'll continue to do that.
Vanessa, I think one of the things that, to me, that the scale of this is no surprise, whether that's transcended down to, citizens across the UK. But I sit on the Standard Financial Statement Governance Group, and we had to call several meetings really to look at what the impact, particularly of inflation, would be. But it's the multiple whammy really on this, including sort of national insurance being confirmed as going up. Council tax position may vary by council, by local authority, but back to the tools, we've been very much encouraging consumers to use some of the public domain tools to go off and check your income and expenditure, to do what if scenarios. And I have to say there are an awful lot of very good providers out there now that enable you to do that, whether that be a sort of policy and practice entitled to, IE Hub, your pay links, your step changes of this world, to go and look at what that position's going to look like in April. And that really ought to be the first port of call. And to me, a lot of the proactive messages should be getting people to think ahead, look at what that looks like. But we then come back into the old adage, Vanessa, about early engagement and the great mass that only do things at the last minute or when it really badly affects them.
Yeah, I'm going to have to interrupt you there, Kevin. We have more breaking news. Interest rates are set to rise by 0.5%. So so there we go. Some more breaking news. If our audience are still with us and aren't running off to go and do the calculations on that, Kevin Stewart, from your perspective.
I'd like to comment, actually, and it's actually a discount rather than a relief or anything of that nature, the £150, but it's also a hardship. And you've got to remember, my test billing is not this weekend coming, it's the weekend after. But in the last 2 years, we've seen a massive amount of relief go out to people. Whether it be businesses or local communities, because obviously this pandemic has been a once-in-a-century event. My job is just not, as I said, about collecting council tax. It's an important part of that. It's about giving people the help. And a lot of people don't realise there's already a lot of discounts and reliefs built into council tax. And bringing in Dominic's system, Teljo, when we send out reminders, when we send out final notices, we actually run it through Teljo, an electronic tool to check on vulnerability. And I can give an example where we actually found a customer who's entitled to severe mental impairment, and we were able to give them an exemption that they would never have known. They would never have picked that up. And too often, when you do it as a conveyor belt activity and goes through the system, the payments, you don't often find out about any vulnerability, and probably until an enforcement agent knocks on the door. And by then you've added additional costs, which just doesn't help anybody. So my view is we need to do more to look at people before we go through. I pick up with the comments about a statutory financial statement. I think that's important too. But it's knowing a very complex system. And you're quite right. Different councils have different council tax races. Different councils have different council tax support schemes. Very, very different. And we have hardship schemes as well. And I've heard mention of a hardship scheme. My council, for example, this year runs a financial hardship scheme of up to £150 for anyone in receipt of council tax support. Some authorities don't do it. We continued it with the government scheme of up to £250. In fact, we gave £200 last year. So we're already used to giving out support. We're already used to giving help to people. but it's just a small picture, because obviously the picture of these costs and benefits with universal credit and everything is a much wider thing than just what I can do. But I think the landscape has changed on the back of COVID and moving forward. And I think we need to work more together. We need to be more joined up to give people the advice, because it's such a complex world. And as I said, I've been in this business 40 years. It's confusing for me at times. But I think it's very important we get the message out there and work with colleagues such as those on the call today.
Yeah, I completely agree, and that echoes some of the sentiments that we've had in previous sessions. Just want to correct ourselves. Our breaking news, it's 0.25% interest rate. As somebody who's just about to move house and complete on her mortgage, that difference is very important. Dom, you and I have been talking, actually, I think probably for about 4 or 5 years, when I was in fintech and Teljo was in its infancy. We're going to see affordability for the most acutely financially vulnerable. These changes will just add to an incredibly difficult situation. But we're going to be seeing more and more financially vulnerable people just about managing those who've exhausted their credit lines. Tell us about Teljo and what have you been able to do? I mean, Kevin alluded to it there. How does Teljo going to help in this new post-pandemic climate?
Well, I think this year is going to be huge. Even with the kind of rebates, I think people are going to be kind of £700 a year worse off than they were last year. So it's going to have a massive impact. And when you look at Teljo and what we see, virtually everybody that we deal with in council tax arrears will be what we class as highly vulnerable. So they might be experiencing, they might have about half of the people that we see will have experienced an income drop all of a sudden, and that's potentially the reason why they're in those difficulties. But then you've got that cost of living increase in as well. It's going to be a traumatic year for anybody on an average salary or less. I think it's going to be very difficult. And actually, I think what you will see over the course of the year is the start of a higher pressure on homelessness and councils and dealing with that in terms of people able to pay their rent. So I think this is the very start of what's going to be a very difficult year, but we're not going to really see the kind of cascade of it until the end. And I think that will reflect in that homelessness situation, and people not being able to afford their rent. What we do with Teljo is Teljo is like an early prevention model. So because we can identify vulnerability, so what it's like, if people are in difficulty, they tend to bury their heads in the sand or put all their letters in a plastic bag and shove it under the stairs. And actually the creditors are just going, you need to pay us, or this is going to happen, or that's going to happen. But actually what we do is we just flip that on its head, and we're not saying give us the money, we're saying, are you okay? And just by changing that conversation, changing that dynamic, you can then build a trust with people and then understand what those difficulties are. And then you can use that as a prevention-based model. So if Kevin sends out Teljo to all of his people that have just missed 1 month's worth of council tax, but actually then he sees that they've just had an income drop, or they've lost their job, or they could get benefits advice. If all of that happens at that stage, it saves all those difficulties later on, because quite often, Kevin's created a pathway where we can transfer straight into benefits advice and make sure that person's getting their full benefits, and that works really well. And actually, his collection rates improve as well. But I think it's going to be a really difficult year, and I think the companies that are really proactive in engaging and supporting their customers now will be the ones that can build the trust. I think the trust will be the key thing, because it's going to get, looking at the figures, even I'm thinking, God, this is really going to affect me personally, and I'm okay, but it's going to be a really tough gig for a lot of people out there this year. It's going to be really hard.
It is, and I think it will last significantly longer for a lot of people for longer than a year. So we talked on other sessions this morning about engagement, and when we talk about consumers with additional needs, vulnerability, is the cost of living crisis a real opportunity here to engage proactively? Kevin, you've talked about some of those great initiatives that are sort of proactive, but also holistic. is there a real opportunity for the whole sector to step up and say, you know, you might be struggling, you might not, you might be worried, this is what we can do for you? And how do we open that conversation up before anybody's in arrears? Kevin Still, I want to start with you there.
Yeah, I mean, I think given where I come from, which is a debt advice angle on this, and I suppose I've had a slightly unique insight from having been program manager at HMRC for a couple of years with a lot of their, you know, it's very seldom that I see in the debt advice sector somebody with one or two debts. So you've got to look at the whole wallet. And there are a couple of things there. I get really concerned when people don't know what a priority debt is. And again, some of the strategies deployed at local government level can be quite benign initially, and then they seriously ramp up. Whereas some of the more advanced consumer credit firms, pretty advanced in their strategies and how they engage. So to me, one of the key distinctions is between people who engage, partially engage, don't engage. And secondly, if you've got a problem debt, you're likely to have 7 or 8 of them, as you know, Vanessa, from Step Change. And for me, that's a crucial one. If you're going to take a proactive approach as a creditor, you're going to probably have a pretty good idea if you've used credit reference information, some open banking information, that this person's got a multiplicity of debts, and you've got to find out whether even the basics are affordable before then going into where do you fit in that pecking order. And at the moment, things like rent, council tax really need to be prioritised. My fear is, from having done a lot of work with my members, is where they're using these proactive tools, we're now finding a whole gamut of clients, I think as Dom just said, that are moving from a small surplus budget to a deficit budget, and doing a bit of economising, you know, spending a bit of time looking on some of the how to save money sites is not the answer to that. This needs some serious forensics here. And that's really where I would strongly advocate, whether they're already with one of Chris's members or the creditor still, is encouraging them to go off in the security of their own consumer portal environment to find out how bad a situation they're genuinely in. Because they can do that in the privacy of their own environment before they start sharing data. And I think that's where Dom's coming from in his sort of proposition, before that information's handed back to the creditors. And for the creditors then to listen to the data. You know, don't dispute the fact if you've completed the standard financial statement properly, covered all the bases, shared all your information, that's the reality. You know, and therefore come up with a tailored solution that matches that. And I think that is still where there's reticence for consumers, is by engaging, do I end up with a worse outcome than if I don't engage, which, you know, has been the case in the past in some sectors.
Kevin, Kevin Still, I know you've got to sort of dash off from, you know, it sounds in terms of your own sort of local authority that you've been maybe one of the more advanced organisations. From a perception of your sector, we all know that councils obviously have had significant reductions in funding, and therefore the collection of council tax becomes even more important. How is that balance going to be struck, and can it? And yeah.
That's a very good question. And of course, there are, I think the last count, 300 odd authorities administering council tax. And I'm sure there's about 600 different ways of doing it. We've taken the attitude, and obviously there's a council tax collection inquiry going on with the MHCLG committee. I'm sure you've contributed towards that going on at the moment. So they are looking at this particular issue. But I think authorities are too quick sometimes. I'll have to say that, too quick to just push it through to enforcement agents and actually do it. Whereas we decided to take one step back and give people an opportunity to actually talk to us. Now, that does have issues because there's only so much you can do electronically. It involves having people to go through it. And I've tried, because I was part of the MAPS Money Advice and Pension pilot a year before Breathing Space came in. So we took the attitude we wanted to work, and we even had the 60-day Breathing Space even before it officially came in, because we were giving people every opportunity. I think there's more we can do to work with. I fully appreciate that the debt advisors and other companies are coming from different parameters, but I think we could do more joined up working on that. I realise there's some authorities you probably never be able to discuss that with, because they're very set in their ways. And of course, the other issue that we've got is the funding of local government. Grants gone out the door. You talk about business rates retention. Well, business is a very much affected sector by COVID. We've paid out grants and reliefs and a whole lot of it, and there's a revaluation coming in 2023 for businesses as well. That's the way that local government is funded for the future, or one of the main streams of funding for the future. So it's striking the balance between helping the customer and actually doing the job as well. I've taken a more careful, prudent approach of trying to help the customer and financial vulnerability. I could probably do more. I accept that, but that's something we've done. And as Dominic alluded to, generally we've kept our collection rates quite well up. But there's probably more we can do as well.
Thanks, Kevin. So if we take it back to our core topic of affordability and vulnerable consumers, we're going to see newly financially vulnerable people then, and people who, you know, as you alluded to, negative, what we call deficit budgets. So where, you know, a step change will go through all your income and expenditure and all your spending. And actually, is there a solution available for you? People are going to find themselves in a situation where there are no options. And as Dom said, where is the belt tightening? And, you know, how do we support people in a post-pandemic world with everything that we've learned? But are there enough solutions? Are there enough options? Should there be a more holistic approach? We've got SDRP coming down the line. We touched on that in the last session. You know, is there enough support? Is there enough solutions when people literally have zero affordability?
Yeah, I mean, it's very difficult to slice this issue up into very specific areas, and you can go through, you know, what should be done on council tax, what should be done on energy bills, and all the rest of it. I mean, the bigger sort of macro picture, even just to be a little bit, if I can just inject a little bit of hope or optimism, is, you know, the economy should be, fingers crossed, reopening, growing. Employment rates are looking fairly positive. Recruitment is high. Now, of course, that's in aggregate. It's not for specifically vulnerable sectors of the community. But although there are pressures, there are opportunities to offset that, even if it's simply increasing government revenues, which can then be used in a subsidising way. I mean, from our point of view, as the collections sector, our constant refrain is engagement, engagement, engagement. Get those conversations, the dialogue going, so that solutions to problem debt can be found. And yes, you're right. I mean, a lot of people will be in those deficit budget situations, but ultimately, you know, the point of the engagement is that it can help with all sorts of repayment options and forbearance options, which I think need to be people need to become to realize that actually the stigma of having contact or conversations, exactly as Dominic was saying, not sticking their paperwork in a plastic bag under the stairs, if that's where you stick your paperwork, Dom. I mean, we've just got to get people out of this notion that communications and dialogue is somehow to be staved off. I think that these situations are so much worse if put off for a couple of years, and people are in a much, much deeper hole. The earlier you have those conversations, the better. Now, that's where technology can, I think, come into it. And Kevin Still was right to talk about some of the online tools where, for customer comfort and convenience, 24 hours a day, calculations and individual assistance can be made. Not everybody can access those. I think we do have to think about accessibility to some of the tools that are there. But, you know, the focus should be on what can we do to remove barriers to conversations and engagement. I mean, we're always looking at the CSA. Some of the bureaucracy that can intercede and get in the way. We've just put out a report, for instance, on the stilted bit of an initial phone call where somebody will say, can you verify your name and address and give us your postcode and whatever, and it can confuse people and they think they're being scammed, so the call ends and doesn't happen. Some of that stuff needs to be dealt with so that we can continue in a common sense way to have conversations. So at all sorts of levels, engagement has to be the focus.
And from a regulatory perspective, we know, particularly in financial services, we've got obviously consumer duty coming in. Is the regulation right? Are there any unintended consequences? I mean, you've mentioned there about obviously the KYC checks, but is there anything out there that we think actually there's elements that are preventing that true engagement because we need to do? I mean, we're moving towards more of a principles-based regulation anyway, but is there any concerns across that from a panel perspective?
I'll let others come in.
I'll just chip in there. I mean, if I just give a quick analogy this week from what came out from the Financial Conduct Authority around their concerns around people making stupid investments, and they're talking about 1 million new investors, but 45% of the people didn't know they could lose money by going on some of these online investment sites. Now, what they've talked about within these digital and other journeys is how they build friction into them and periods of contemplation. And a lot of this comes then around the trust factor, dealing with the scam factor. So I'd like to just build on what Chris was doing with the CSA, because I think it's really important. This is where digital, even if it's part of the journey, is important. The expectation that you're going to get a phone call, that it's not a surprise, it's not out of the blue, that there is a way of dual authenticating something that meets the client's preferences. But I also got to be, I'm a little bit a cynic in some instances, although I've been in the debt advice sector for many years. A lot of the people that we work with often have the very best phones. So things like smartphones. So with the exception now of probably your over 70s, internet penetration, use of mobiles is very, very widespread. And aligning then to using some of the things that Chris's paper talks about is, give everybody the heads up, every opportunity to communicate. You can check how many SMSs have been opened, emails been opened, etc. But it shouldn't be a surprise when they get a call from one of Chris's members, and that the IDMV, the identity and verification, should be a format that says, I know who I'm speaking to. I know I'm speaking to one of Chris's members because that's come up on the phone. You've reduced the spam risk, but at the same time that the check, particularly if there's going to be multiple contacts, is pain-free, particularly on an ongoing basis. And Vanessa, we know we need to do that in the debt advice sector because reviews are difficult, particularly when somebody doesn't want to pay you anymore, or is actually worried you might get your plan cancelled because, as a result of that their negative income means that they don't have a debt solution to go into. So often they do things that they think telling you the right thing, when in actual fact, you don't get the best outcome. So I think this is where digital plays a part in doing exactly what Chris is saying, that there's still a big role for outbound, but you've got to make it, less of a surprise. It's not a guerrilla tactic, and that you are going to have a communication and it's an opportunity to have a quality dialogue.
Vanessa, if I may just come in before I need to nip off. My view is that I think we need to do more engagement, certainly from my sector. I agree with that. But we're all talking about a new normal now. So the people that we may be talking to are probably not our known people that we've known over the years, because I think COVID has rather changed some of the parameters. And the other thing is, what we've got to remember, a lot of the financial help that's been out there, job furlough and all the other schemes, are drying up. Okay, we've mentioned about the extra help to the bills, etc. But it's knowing and working with our partners, these people are here, the people on the call today, to actually help people pay those debts, because it is a complex world out there. And I think that engagement, I just have to add the engagement, whether we do it through Teljo, we do it through partners such as Step Change and others. I think we just got to do more of it.
Do more of it. And it's going to be quite a clouded environment for consumers to navigate. So because if everybody suddenly goes, right, engage with us, it's going to be overwhelmed. And it's like, leave me alone. I need to make, I need to make sense of this. I need to understand, what is coming in, what's coming out. So I can completely agree. And I know you have to leave us. So
thank you so much. Thank you.
Been great to have you on.
Cheers.
So coming back to digital. So digital has a role to play. We've spoke throughout today about obviously that blended channel mix. I'm looking at to see if we've got any questions. We haven't got any questions, so I hope we still got an audience. And I know we're competing. I feel like I'm on BBC Two, and it's the crescendo of an EastEnders EastEnders storyline. But coming back to engagement and how, if you are facing these challenges right now and you've never been in financial difficulty before, how do we break down those barriers collectively? So we know that pandemic, announced at the beginning of the pandemic, it was 3 missed payment holidays and everybody engaged. How do we open that up? But how does the industry deal with overwhelm? And therefore, how does the technology work? Because you'd argue for those that are digitally excluded. I mean, obviously, Kevin, I know we're seeing far and far less of that, but we contrast that with only 6% of people would take a call from an unknown number. So how are we going to make it as accessible as possible whilst maintaining phone lines, web chat for those people that really need it? I don't have an answer for any of that. It's kind of going to be suck it and see, but yeah, I mean,
I think there's some mutual challenges there, and I think as we've seen with the very visible debate around community debt advice, people don't just walk along the street and walk into community debt advice. Typically, they've got to get there somehow or another. So it's going to be some of your digital telephony journeys, but where the clever bits fit in, irrespective of whether you're just looking digital, is trying to get it into the right tailored journey path, because we can't as an industry afford to offer everybody face-to-face advice in a city-based office, even if leveling up really hits across the whole country in the way somebody's meant to expect. But we do need to get the right people to the right medium so that they can engage properly. And where those decision engines really become quite important in terms of how early in that cycle, as it said, I've just picked up that this person is, their cognitive ability is not great, or they're giving me all of these little red flags. I need to be taking them down a particular path, which may involve multiple sessions because attention span may not be everything. And where I'm seeing, the best work, I think, is those that are looking at it from their triage process, rather than trying to force everybody down a particular route, is to say, and that's the natural part of this national service, as you know, Vanessa, is trying to build an ecosystem that says we can offer proportionately the right channels, and we can recognize the people that actually just need advice or financial education versus the people that will always need support and repeat sessions across the board. And I think there's a lot of good tools to do that, but you still, at the top end, you've still got to have your operating model that says, I know who my customers are, and it's got to fit, back to Dom's point, around the right culture. And different firms have very different cultures as to how they want to do that. And that may have come from enrollment in the first place versus some that are going very specifically into a digital audience, which is like we're seeing buy now, pay later. And you're likely to make very different assumptions about your client bank if you have onboarded them digitally versus a bank with loads of branches where those branches are no longer open anymore. And you've got to try and keep them with you, going forward.
We've got a great question on that exact point, actually, from Abjit. What will be the collection code of conduct for digital collection, as in physical collection? So do we have a digital code of conduct for collections?
I mean, we have obviously got there are several sort of answers to this. Obviously, the Financial Conduct Authority has its particular series of guidance to financial services firms writ large, creditors as well, particularly when it comes to sort of vulnerability. So I think what was we've sort of seen various different sort of iterations of that. I think we saw one last year, the Vulnerable Customer Guidance Note from the FCA. I mean, separately from collections point of view at the Credit Services Association, we have our own code of conduct for firms, whether they're regulated or not. And there's obviously a complaints process that's attached to the back end of that if customers, feel that they're not being treated properly to that. And in a sense, your rights and your expectations shouldn't change necessarily which channel you're using, but increasingly we will be putting out support notes to member firms of ours about key considerations they should take into account of when shifting to digital. So, for example, we've just done a survey of our member firms this past couple of weeks about what their expectations are in terms of the shift to digital and self-serve interface. And so probably around Easter time, we'll put out a report that may well mean that we're looking at, well, what are the regulatory implications for some of these things? I think when it comes to vulnerability in particular, the issue that is on the forefront of my mind is data protection regulation and how that sort of abuts the sort of common sense instinct of a lot of firms to help individuals and share information. A lot of times in the public sector, when you look at vulnerability and break it down, it's often to do with health conditions, major life events, those sorts of circumstances where a financial query will come up in a hospital circumstance or in different sort of environments. Now, to what extent can the public services generally share information, about an individual's vulnerability? You want to help them, but of course, vulnerability is a special characteristic. Therefore, there are often higher thresholds and standards about taking care not to share information, personalized information like that. So they're kind of pulling in different directions. And I think we need to engage with the Information Commissioner's Office as well as the other regulators to help deal with that. I mean, there are some services out there. Vulnerability Registration Service has been trying to sort of grapple with this issue for quite a while. A lot of the credit reference agencies have been thinking, well, is there a way of putting in a flag for vulnerability? And they've never quite got there, mostly because of this data protection unsolved issue. But I don't think we should. Yes, there are risks of sharing data. Of course there are, unfairly. But there are risks to not intervening and offering help to those in vulnerability simply because an institution presumed that they didn't need to have information shared. So that's on my mind.
The Priority Services Register in energy and water is a really great example of that. Where is the equivalent for those other sectors? How could we or couldn't we extend that beyond? So we've got some more questions coming in. So from Denise Crosley, known to all of us on here, in terms of the trust. So how are we building trust in a digital landscape? And we touched on that in a previous session, but how do we do that? Dom, how do you get consumers to tell you so much? Because you're predominantly digital, right?
So all we care about really is customer outcome. That's all we're interested in. And our customer outcome really is to assess or to understand what their vulnerability is. But in terms of engaging with people, I don't understand how anybody can do it and not be digital, because I don't understand how that would work, because digital works so well in that scenario where you're asking people to disclose. So if my bank rings me up and says, Dom, tell me about your mental health, that's not a conversation I'm going to have. But if they employ a third party and they get their messaging right, then they're able to build trust. So when a council uses Teljo, it's a digital invitation for a digital assessment, and you'll have your disengaged audience that are in arrears, and actually we can engage with up to 30% using a digital solution. So it works, but all we care about is the outcome, and that gets us the outcome that we want. But then we ask the most personal questions. So we'll be asking, 10% of people that do a Teljo assessment would have experienced domestic abuse. 30% will be experiencing addiction. 40% will be experiencing suicidal thoughts. All of this has come from that one point of engagement, because if you ask right, if we don't ask for money, we don't ask for anything. All we ask is for their information to help and improve their circumstances. And by nature of the fact that the organisation has sent us Teljo, then builds trust as well, because they've sent it, so they must care. So that happens. That's not to say that there's not a place for a human engagement. I'm not anti-human. I think, and definitely when you're creating outcomes, you can get a much better result if you, for example, if I create a timed appointment for debt advice, it's 10 times more likely to happen than if I have a digital journey. So for us, the digital part's very much the front end, but actually the outcome driving, there's a lot of opportunity for human intervention. But also, what I'd also say is the vulnerabilities are often the reason for why people are getting into difficulty, and they're always correlated. Nobody's just got a mental health issue or a debt issue, or they're always correlated, and they're also cascade in a certain order as well. So it's all quite interesting in which ones you tackle first. But I think trust comes from your ambition to help your customer, I think,
and communicating that really, really effectively, and delivering. Actually, trust. If I open up to you and there's a positive experience and a positive engagement, I'm going to trust you. But I mean, telephony, we're almost painting a picture as if telephone's been perfect for the last 20 years. We all know of calls we've had where we're going, what a waste of time that was, so we've got to make sure we're not looking at the past of all inbound and outbound has all been perfect, and we're really grappling, because actually some online journeys are far better. There's a question here around many references to human conversation. I think Dom, you just answered this really for us, but what tools are available to assist or scaffold the conversation? I love that phrase. How is tech supporting the humans rather than trying to replace them? So getting the tech to do the heavy lifting, enabling the conversation, get the I&E done before getting into the debt advice conversation, because that's the richness and the support, and the stress comes to, well, what are my solutions? So yeah, I think you touched on that brilliantly. I don't know if anybody else wants to answer that.
I think this is where we look, and I think it came up in one of the sessions that David talked about earlier on. Where you're using these things in context. So going back to something like HMRC, where they do speech analytics at scale, some of the natural language processing, particularly in real time, really does help agents on the telephone. But it is a key investment if you are going to use that, particularly identifying vulnerability and particularly avoiding repetition and building quality discussions. And if debt advisors are at a premium, there are a lot of non-advised activities you just want to take away, and the technology really does help a lot with that. So if there's a lot of activities going on whilst all this is going on, using the information delivered in the customer's own language, which is important. And so services like Amplify, which are, Step Change are working with, which is designed to get the language down to the right level. And unfortunately, we're talking about reading ages of 11, mathematics levels of 11. And so anything there is that's picking up either written, so it could be an FCA information sheet, or it could be a piece of legalese, something that simplifies that and can be relayed back, but also deals with issues. The guy at Amplify there had dyslexia, and that was one of the drivers why he set that process up. So a lot of these guys do disclose a lot of very useful information, and we all relate to it firsthand. It's not used by the agent. If the agent's constantly getting little flags that said, this person's already given you a killer piece of information about the number of times they go to the doctors, why aren't we using that in the quality discussion? So that's where I think supportive tech is really making a big difference, where in a world, telephony is still a key part of what we do.
Yeah, I completely agree. I spent quite a bit of time in the energy sector and listening to, really complex, vulnerable calls, and the amount of triggers that were just missed. How we do that in an online world, I really don't know, because how are chatbots and AI going to pick up on that? And actually, could they do a better job than human beings? So we could go on well into the afternoon, I'm sure. And I just want to thank you all for prioritising being on this session in view of today's announcements. So thank you, Kevin, Dom and Chris. Thank you to our audience and the questions. And I hand back now to Colin.
Lovely. Thanks, Vanessa. Yep. Appreciate echoing Vanessa's thoughts as usual in terms of the audience. And obviously our great panel, that was really, really interesting. We had a flurry of questions near the end as well, which is good. So makes things more interesting. So yeah, I think we'll just round up and leave it there. We've got one more panel now coming up. at 1 p.m. talking about the future of collections. So we'd love to see some more of you on there. But these sessions are all being recorded today. We usually put them up online. We've got a new YouTube channel where we're putting a lot of content on now. So if you missed anything today, have a look at that. As I say, we'll round up some of those questions in our review next week. But I'd like to thank everybody for tuning in and end this broadcast now. And thank our panelists as well. And we'll see you all soon. Thanks a lot. Cheers. Bye-bye.